Hi guys. All right, so David L is here, so we are good to go. It's really the cream of the cream of the trading crop has arrived. Good. All right, guys. So we're gonna talk about uh, and Dave, I meant that in a affectionate, haven't seen you for a while kind of way. The all right, guys. So today we're gonna talk about why traders fail and things that um yeah, still waiting. Why traders fail and some of the things we can do to correct those things. And this is more, I may not be telling you anything you don't know, frankly. Um, and in true Pegler fashion, we're just going to shoot from the hip on some things as they come up. So if you have anything to contribute during the course of this, let me know. And there's a good chance we're going to expend most of our time, or rather expend most of our subject matter here early, and we can look at anything you want at that point. Um, um, so I'll just kick it off and I invite comment as we go, okay? So the biggest the biggest reason I see that people fail in trading is because they are amateurish in their approach, and that sounds condescending, but it sort of is what it is. So um, lately, one of my projects that we were going on, a friend of mine and I, we have been working on um, getting an olive farm put together here in Georgia. I recently moved across the country. And it's very evident that we know nothing. We know nothing about how olives grow. We know nothing about how the market. We know nothing about the lending. We know nothing about uh, any of the business planning. We know nothing. And it's also very evident that we are a very small fish swimming in a very big pond. And this is the case with any venture of any sort, notwithstanding trading. And I'll argue almost that there's more to learn in trading than some of these other things. Um, the issue, one of the issues though, with trading is that there are many voices out there, all with an opinion. If you turn on the TV, you're going to hear 73 talking heads. You know, the other day I was listening to the head of Morgan Stanley talk. We've got $1 trillion under management now. And here's what he said. They asked him about the dollar, and they said, well, isn't the dollar basically a rate hike? It's been built in. And he said yes, and then they said, well, what do you expect from the dollar moving forward? And he said the following. He said, well, I expect the dollar to be relatively strong, but I also don't expect the euro to depreciate. I'm sorry, he didn't say the euro specifically. He said, I expect the dollar to be relatively strong, but I don't necessarily expect the other currencies to depreciate relative to the dollar. I'm sorry, what? What does it even mean? Uh, this this man controls $1 trillion. And it's just doublespeak, isn't it? It means nothing. Then he went on to talk about the bond market and some other different things. All right. The you guys got sound, right? Yeah. All right, thanks. Okay. So my point is this on this matter, and I'm very serious about this, is when you exploring forex, or even if you're at a more mature sort of level in your exploration of trading, it's very important, in my opinion, to find one thing that is suitable for you and your personality. Because I almost argue that it doesn't matter the system that you use. There are so many ways to skin this cat. Whether you look at Fibonacci and that's your thing, then that needs to be your thing. If you look at just price action, then that needs to be your thing. If you're looking at Okamoku clouds, then those need to be your thing. All right? It doesn't matter, is what I'm saying. Because they all have, how you internalize them is what matters. Okay, I'll give you an example. I might look at this euro like this. All right, so here's, you know what? Let's look at the pound. By the way, how about those dollar shorts that we've been talking about for a while? Let's give ourselves some kudos on that one. All right, so let's look at the pound here. Thank you, Dave. Thank you. All right, so here we go. And I'm going to remove this moving average altogether. But they already have worked very well. Very nicely. All right. And, you know, what was the reason for that, so to speak? Well, we believed that, you know, the pessimism was overdone and that the Eurozone was going to be left standing when it was all said and done. And it will be. And I promise you in 24 months' time, 105 is going to look pretty cheap on the euro. I think we're going to go back down there. But look back in 2 years, I promise you 105 is going to look like a bargain. And 75 cents on the Aussie is going to look very like it was a red hanger sale at Edgar's. Okay, so example here of different ways to see something. All right, pound, if you zoom out on this, say you are just a support and resistance kind of trader, meaning that you don't really look at anything else. Just buy and sell zones on the chart. You have no idea about fundamentals, nothing. You're just looking at horizontal support, no trend lines, nothing. All right, what have you got here? Support, support, support. You know, arguably it's down lower. Support, which it breached. And then what have you got on the top side? You kind of got this resistance. Resistance. And I'm out there on a weekly chart, by the way. Resistance. Resistance. Okay. You know, is there a greater trend in play? I don't know. It's to me it kind of it's historically been in this range. You know, it's gone above and below it, but that's kind of the range, isn't it? Yes, we have pushed above it here, and we have sort of breached it on the bottom side. But in the last 30 years, it's for the most part been in this 170 range to 148, 145 range. Okay, and more immediately, we're kind of between this green zone and this red zone on the top here. So if you were just looking at support and resistance, that's probably got your attention. Now, admittedly, we have kind of hit the top of that, and hence why we are in retracement mode. Where you put the line, these are large daily resistance zones. So it's, you're going to run into them and breach them a little bit. But there we are. We're kind of bouncing between it. And where's sort of the next level? It's up here. All right? It's right around, we'll call it 56.5 for argument's sake, because that'll be very significant. Boom, 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 boom. I think you're picking up what I'm putting down here. And at that point, it's very likely that we're going to do something like this. And take it all the way back down to where the bottom of the range, for the first stop here towards sort of 51 and change. What have we done? We've done nothing but look at support and resistance. Now, where is the mistake made? The mistake is made when this is coming down and it's been down for the last, I don't know, year. I mean, how do we have the conviction to take that trade? Well, you have the conviction to take that trade because this has been the way you trade for the last 2.5, 3, 4, 5 years. So when it hits your levels, you just put on trades. But if you're looking at this and you've got CNBC going, no, the British economy is falling apart and the election's coming out, there's going to be a blah, 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 blah. No, pound is nothing but dead. And maybe you've got another analyst in your ear saying, pound is so bullish, it's crazy. And then you've got a little bit of doubt in your mind because the prevailing daily trend is down. So you're like, oh, it's nothing but down here. Too much noise. It's just too much noise in your head. Okay? Your own analysis is the best analysis in the world. Alright? So the only way you're ever going to build a level of conviction is by pushing yourself to have that conviction and by sticking with one thing. Okay? Now, because that develops confidence. Okay, now. So that's just from the support and resistance perspective. Alright? But what happens if you were, a 4-hour price action sort of guy or girl? It probably is, yes, Mark. Okay. Price comes off the resistance, breaks the support, jogs down a little bit. This is a classic continuation pattern at support. You've seen this one, right? The price comes down, retraces back to around a 50%, creates a continuation pattern, you get sort of something like this developing. The other one is this. Pushes down, has this continuation pattern, but then you get what looks to be the same thing, but you got support below it. Guys, this is one of my favorite setups. Inevitably, you do something like this. You go, thanks, break, no, and you go right back to this range. You just said over and over and over and over and over. Go look at Euro Aussie on a daily chart. Or even a 4-hour chart. It's right there. We know that 36 and change is mega support. So it makes a big fat continuation pattern right at the support, breaks down through it, and goes right back through itself. Anyway, my point being is this. Let's say you have that expectation. Okay. Take a look at the price action here. Classic sort of change of trend, right around 145, and then breaks up further, returns to it. We discussed change of trends the other day, so here you have one. Yes, David, but it came right into the resistance. Sure. It did. But here's a very limited risk opportunity after a little change of trend here. Or even this. So what are we expecting? David, that's hindsight. No, it's not, because we've kind of been talking about it for a long time. Now what are we doing? I think we'll get us some of this. And then... All right. My point being, though, is that it's got more to do with the one strategy that you choose. Okay? Perhaps you adopt, I don't know. Let's have a look at something else here. Perhaps you adopt something like this, where you like a envelope of moving averages, and you only trade in the direction when the envelope's folded over on itself. And these, I think I was like 5 to 100 here, 5 EMA to 100 EMA. Envelope's folded on itself, returns back to it, jogs up a little bit, folds down on itself, retests the envelope, neutral, breaks up, envelope's folded over, retest. There are ways to do it, but they're all getting you to the same place. But what I'm trying to say to you is do one thing. All right? Too much noise is going to really hurt you. Okay, so that's point number one. Okay. Number two is this. You guys aren't going to want to hear it. And this is the one that's probably fairly controversial in most folks' minds. I don't believe that you can go trading Forex effectively without having a chunk of money. Your broker would have you believe that those are just sort of 5, 10, 15, 20 all the way to 100. But the ones I use on a daily basis are the 5 EMA and 21 EMA. But like I said, that I don't even know why I have EMAs on my stuff. I guess I've just become so accustomed to them that they're just there. They just look pretty and whatever. They're kind of subliminally in the message for me somewhere. All right, let me get back to this money thing. I don't believe that you can trade Forex effectively with less than a couple $100,000. Oh, David, that's preposterous. I don't think so, really. And this roots back to the amateur thing. And I don't mean that condescendingly. Because here's what happens, okay? Here's what happens. And I've talked about this before. Let's say you have let's say that you have $2,000. Your broker says you can get rich on $2,000. Okay? Here's what gives. And we've gone over this a lot. And I'll tell you the way that I trade. And a lot of these are lessons learned. I mean, started trading Forex 2006, properly 2007. We're going on 8-9 years now. I cannot believe it's been that long. Honestly, it feels like yesterday, but here we are. One's trader psychology is a fragile thing. It's very, very fragile. And it takes time to figure out. I think that the technicals and even the fundamentals you can figure out pretty quickly within a year. And the other thing off the top of my head, major reason why people struggle with the fundamentals is because these things take so long to switch. A fundamental cycle takes years. And the decay of a fundamental cycle takes years. But when it changes very quickly. But the process of that change and the noise involved with that change takes years, and that's very difficult to sit through on a daily basis and try and figure out where you are in the context of it. I mean, everybody struggles with that. Those that have been at this game 30 years. All right, let me get back to this money thing. If you have a small amount of money, all right, let's call it 2 grand. And you plan yourself some trades. And let's say you're more of an intraday sort of mindset. And you spend hours planning this stuff. And you put on a couple nice trades. Let's say you trade, I don't know, 2 mini lots, $2 a pip. Okay? In your first euro trade, you make $40, 20 pips. Second one, you make, I don't know, 30 and 30. Okay, so for that day you make $100. The next day comes, yes, but the investment here in time, it took 8 hours to make this $100. 8. I think McDonald's now is paying $10.25 in California. So a little bit better than Mackie D's, but not much. And oh, by the way, you've been sweating up a pancreas the entire time that you've been sitting at the desk. All right? And you've invested years to get to this position. Right, next day comes along, and you start out great. You make $25 on your first trade. The next one, though, you make minus 30. You haven't done anything wrong. And then the next one's break even. So you've made minus 5 for the day. And once again, it took 8 hours to make minus 5. Wednesday comes along, and you go minus 10 to start, which is nothing. Plus 25, plus 20. Okay, great. Plus 35. And it took 8 hours. Okay, so here is, I don't know, $12 an hour, paid to work. A little over $4 an hour here on Wednesday. So really, McDonald's is looking pretty good right now. Okay, but overall, you're not doing too bad. Overall, you're up 7% on your account. Pretty good. Okay, Thursday comes along and you're off to a tough start. And you go minus 10, nothing again. Minus 20 and a break even. Okay, so now we're at minus 30. And today you only worked 6 hours because the Giants game was on and you wanted to watch. Right, so now we have gone 6 hours for minus $5 an hour. And overall for the week, you're up 5%. Okay, now you're actually doing pretty well as far as trading goes. Because tomorrow could be a banner day. But in your mind, you're feeling fairly defeated. Okay, now let's say even Thursday comes along and you go minus 40 right out the gate. And you work 5 hours. Your confidence a little bit shot because the last 4 days have been rough. You're minus 40 for 5. You're still up 3% on your account. But Friday comes along and your actual setups are in place beautifully and you would have made plus 260, but you don't even trade them because you're shattered. You're tired. You are vexed. Your confidence is low. So you don't capitalize on your Friday bonanza. Guys, you got to understand trading is a little bit like war. And I hate to use war analogies because they're different. And then obviously Monday doesn't go as planned and you actually take a bigger hit Monday because you've had a pep talk on Sunday and Saturday. You've been talking to yourself all weekend because you think you're an abject failure. Because, oh no, I didn't trade. So then you go trade Monday, and because you went against sort of the law of averages, Monday's a bad day, and your account is down to 1830. Now you've got to make now you've got to make like 15, 20% just to get it back to where you were. And the beginning of the end has started. I'm sure this has to be ringing some bells with some people. We've all been here. Yeah. Okay. Now, the the problem is not the money. I mean, spend $100 on movie tickets in a month. You know, the $100 that you lose to get to your, 170 you get to 1830 is not. It's not about the money. It's about what's going on in your noggin. Cat toys. Yes. It's about what's going on in your head. It's the time that you've invested. It's the sort of it's the sweat, blood, and tears you put into this. It's the pride. You've told your friends you're going trading. And you know what you're talking about, for the most part. Okay? And it only takes a week to derail you, which is ridiculous. Alright. So I've figured out this is not working for me. This model. And I don't care if it's with 50 grand or 2 grand. This model's not working. And for some folks, it may work. Maybe they're just so thick-skinned that they don't care about any of this and they realize it's the process and to heck with it. And that's awesome. More power to you. So here's another one. You're not going to like it. But I did away with stops. And I said, right, my bias is such and such. Yeah, the magic indicator, we're still looking for that. And I have taken some sizable losses. But I've also taken some sizable wins. So now what I do is I go, I am pound bullish to that 57. And I go, great. I want a long here. I want a long here. And I want a long here. And I want like a big time sort of, I want something that if it falls through the floor, I'm good down here too. And I want all my take profits up here. And that's it. Okay, one hit. Two hit. Okay. Alright, well. Okay. Okay, cool. What happens if it falls through the floor? Well, the account size is large enough, the position size is small enough that it can go to 135. David, what about the drawdown? Yeah. It's a big deal. But it wasn't working for me blowing up 18 or 2 grand a pop. So do I want to lose from $1 million? Do I want to lose by virtue of $1 million cuts? Or do I want to give myself the best psychological opportunity to be successful the way that, I mean, said differently, I need to do something different that I'm not self-sabotaging myself. So if you write on the market a lot, you need to give yourself that opportunity to be right. And I promise you, well, I like to look at it per sort of position size. So, I bought Euro all the way from like 112, 113, 108, 107, all the way into the 106s, with it fully anticipating that it may actually go all the way down to parity. And so some of those are not in profit. In fact, one of them at 12.10 was, um, and there's going to be a lot of people that listen to this recording and go, this guy's off his rocker. Probably. I mean, that happened a long time ago. But, I will never risk on a position size with a catastrophic sort of intention that I risk more than sort of 15% on that built into it. So even on your, if you have 200,000, it could be 50 grand. You just got to get it small enough, that the worst case scenario is going to draw me down sort of 15%. So my wins are only, 1,000, 2 grand, 1,500, but they all add up. Okay. And I'm not saying this may necessarily be for you, but my point is more along the lines of if you know that you're right and you're still losing money, that has to change. And it has to change, if for no other reason, to save yourself the sanity. To spare yourself the dismay. I mean, in the case of this pound, sure. What are the levels we talked about? As long as we have not hit 57. I'll say it again. As long as we have not hit 57. I'm looking to buy here between 48.80 and 50. If we go directly, don't pass go, don't collect 200 to 57, 40, 58, I'm a seller here to that level. So there's something like this. And then I will buy it again when it starts hitting the 47s to 45s. Boyki, my point is that I believe the small account stuff is very difficult to overcome psychologically. Because the swings in the account and the percentages you're dealing with are difficult to look at on a day-to-day basis and get your head around them. That's my point. Where if you have a larger account, you have to be less specific. You can maneuver your money around differently, and you can allow the market. You can allow yourself to be early or slightly late and still make money. You don't have to be so perfect. That's my point. All right, so we'll go 57 here, 57, 50. It really depends on your account sizing, and I know everybody isn't, I know it's different, everybody has different amounts that they can trade, and I don't want to sort of shoot somebody's dream down here. A mini account, you can trade mini accounts on $1 million if you want it. The thing is, you also want to make money, I mean, it's like, you're not here for your health. You want to make some freaking cash. So to do that, you need some money. I'm going to go 50 to 48 here. And it just roots back to it. I'll give you an example. Yes, don't quit your day job. I'll give you an example. So when I left high school, I was playing, at the time, minor league rugby. At the time, there was not there anymore, but it was the Natal Wildebeest. And I played SA schools, I played Natal schools, blah, 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 blah. And then I was given a contract by the Wildebeest, which are the sort of the minor league squad. And I was also playing at College Rovers, plus trying to go to school. And the guys that were less talented than me, but had wealthier parents who could just play rugby, ended up, some of them making the Sharks team, which are the major provincial squad, and getting good contracts. I was a loose forward. But the guy that was trying to do 17 things couldn't make it. And Forex is a lot of the same. I'm in a position, I'm luckily where this is all I do. It's very difficult to compete with somebody that's all they do. So keep that in mind, is that, a level of expectation that this could take you years. And it's an immersion thing, All right, so the two things that we've talked about so far have been trade, technically and fundamentally, your main, the things that appeal to you. It could be anything. It doesn't matter. Yes, Dave. And that it's true that the struggle is, and this is more sort of a commiseratory thing. The struggle is that how can you ever go pro if you're not pro? It's the chicken or the egg. Right? And I honestly don't know the answer to that. Maybe changing, I don't know. It's very difficult because, and sometimes plan B distracts so much from plan A that, plan A goes down the toilet too. But to me, discipline, patience, planning, those things are all kind of, part and parcel of. If you lose enough money, you realize you're probably going to need a plan. Yes, and that goes back to, yes, the question or the remark is changing up your system. Changing up your system too is a very quick way to derail yourself, and that's absolutely right. And it's not necessarily, once again, because either system is less productive than the other, but it's more related to the psychology of it. I'm all about psychology and trading because to me it's the biggest deal breaker or maker. Has to be a certain amount of I don't care in trading. We all care, of course, but the conviction to be able to put on a trade and let it do its thing, whether that's for a 2-month period or a 2-hour period, is all about psychology and trust. Yeah, exactly. And that also roots back to me to position sizing relative to account size. You know, if you know that your account can basically take anything, then you're going to be happier. And I know that's probably, a lot of folks are like, oh, Pegler, that isn't going to work for me. I mean, I'm just trying to tell you, if you've been doing the same thing and it's not working for you over the last 2 years, do something else. And I'm not saying do something else in terms of analysis, do something else in the way that you trade. Probably not McDonald's, Boyke. Probably, I mean, feeding your family is important too. But I think you know what I mean. There has to be enough, money there to make it work. Yeah, I know. All right, so we have 4 minutes left. I don't think I want to venture out into another White Traders fail topic. We covered two and we burned up 40 minutes. So how about we spend 5 minutes looking at a chart and talking about some things. Let's look at the euro and let's talk about this. If we have time, we can spin back to the CAD. Is that cool? Yeah, there'll be more reasons part 2 next time. And if you guys have something you want me to talk about, by all means, tweet me or email me. C5 David. We'll spin back to this CAD. And then I can put on a schedule for next time and dedicate 45 minutes to it. All right, so here's our little friend, the euro. Now, what's more intriguing to me here is probably the dollar index is 60% euro. Right? So sometimes the dollar index is going to give you a better look than the euro chart itself. But basically traders So let me show you this. I've been buying euro for a couple of weeks now, yeah. And pound and Aussie. Selling US CAD. Basically short the dollar. Yeah, I'll put my email in here. That's a good way to get a hold of me is actually Twitter. It's at Forex David. Because I post trading tweets basically almost every day, and I'm always reachable on there in real time during the night. Okay. So here's the dollar index, and I'm going to scoot all the way out to monthly here. Notice the distance. I'm going to hustle because I got 1 minute. Notice the distance to this 21 EMA. Okay? And we went up into this resistance, but have now effectively held it. This 5 EMA, which has been support, is likely to hold once. Okay? But then it looks to me like we're probably off to this 93 level. Now, by itself, not a trade plan. Sorry, FX Street, is it cool if I run over just about 2 minutes? So it's not necessarily a trade plan, but where is this 93? Well, it seems like it's the bottom of this little range. And it's through the 21 EMA just a little bit, which is pretty normal. Oh, I think I posted my email to not everybody. I posted it just to, there we go. There we go. That's my email and my twit. Okay, so at resistance here, or now support, that's pretty important. I've actually had 1250 as a target on one of my positions for a long time, and I missed it by 2 pips. So it's a little bit irritating. All right, now let's look at this euro itself. And obviously, this 16 levels up there, but it's, I mean, that's up there a little bit. You know, we got some stuff towards 14. But it's in retracement mode here a little bit. Also notice the daily stochastic hard up. Is the trend still down? Yes. But this is really the first time that we've broken one of these daily highs. Okay. So I think that yes, we're probably on our way somewhere towards 14.5, 15. But we're into, and that equates to about 93 on that DX. But we're into the resistance here, or will be in the 13s. So here's also a little daily change of trend, broken at swing highs. But we don't want to, certainly don't want to buy into this even if it goes through it. So I would love for it to do kind of something like this. 13 and change. Walks its way down. And I only trade in the direction of my bias, so yes, it's pretty a magnificent short. Pick it up in the 108s and the 106 and 105.50. And try and take it somewhere towards sort of 114. And then look to short it between 14.50 and 16.50 and try to chase that down towards 104. So I'm a buyer here at 107. I am short from 14 sort of 80 1480 to 1680. And I'm going to buy it again all the way from 104 to 95 cents for like a year and a half. Because I believe the euro is going to look pretty cheap down here. Because I don't think the Fed is raising rates anytime soon, and they've sucked all the growth out of the market that they could possibly extract. So those are my primary trade plans for the next 2 years. And this here is going to be build, because I think this is going to range around for a while. Remember our trend is reversed, you know, it's like this. Okay. As long as they take, Boyki. So that's my little Euro game plan. There's a lot of waiting around here. A lot of YouTubing, a lot of working on other projects, and wait. Alright guys, once again, at Forex David or C5 David Pegler, I'm happy to help you as best as I can. And I hope you got something from this. Once again, our time sort of ran low quickly. And thank you, FX Street. And we'll see you guys in a month. Cheers.